Welcome back to Investing Talk Podcast. Today we're tackling a question many of you might be asking. Is Walgreens Boots Alliance a good time to buy now? We've gathered insights from various sources you sent us to give you a clear picture. Before we jump in, please remember to subscribe, like, and comment. It really helps us bring more of these analyses to you. And if there's a specific company you'd like us to look into, just leave a comment below. Maybe even consider buying us a coffee if you find this useful.
Absolutely. And Walgreens is an interesting one. It's really a company at a crossroads, isn't it? Navigating some pretty significant industry shifts. The sources you gathered paint a nuanced picture. There's potential, definitely, but also some notable risks we need to unpack.
Okay, let's do that. So the overall take from the sources seems mixed. A modest upside, maybe, but clear risks flagged. It gets a 5 out of 10 rating overall. That's not exactly a strong buy signal right out of the gate, is it?
Not at all. It immediately tells you this is probably viewed as more suitable for, let's say, a cautiously balanced long-term approach. It's likely not the stock for aggressive short-term traders looking for quick pops. That's the first key takeaway, really.
Okay, so patience is key. Let's dig into the fundamentals then. Financial health. We're looking at substantial revenue. The sources mention around $154.58 billion over the trailing 12 months. That's a huge number.
It really is a massive top line.
But then the company reported a net loss, about $6.3 billion, and a negative EPS of negative 7.29. So how do we square that? Massive sales, but deep in the red. What does that tell us about their profitability?
Well, it points directly to significant challenges, right? Despite all that money coming in, they're struggling to make it profitable. Margins are under serious pressure. And if you connect this to the bigger picture, Walgreens is a giant in retail pharmacy, healthcare services globally. Huge footprint, but they're facing intense pressure. Evolving healthcare trends, telehealth, digital pharmacies, plus fierce competition, it's hitting them hard.
Right, so it's not just a blip, it's fundamental pressure on the business model.
Exactly. And that pressure impacts profitability directly.
Okay, so given those losses, there's no current PE ratio, the standard price to earnings. But the sources point to a forward PE ratio of 7.29. That's described as relatively low. And you combine that with a market cap around $10 billion against that huge $154 billion revenue, that suggests a low price to sales ratio too. So what should we make of these valuation numbers? Are they hinting at potential value, or is it low for a reason?
That's the million-dollar question. A low forward PE can imply undervaluation, suggesting the market expects earnings to recover and improve down the line. So it's interesting, potentially attractive.
There's always a but, isn't there?
Yeah. The analyst consensus is generally a hold, not a buy. And the average 12-month price target is around $10.59. With the stock currently trading near $11.60, that actually implies a slight downside risk from where it is now.
Okay, so the analysts aren't quite buying the recovery story just yet, or at least not enough to recommend buying aggressively at current levels.
Precisely. Now, some forecasts do see it moving up, maybe to between $11.50 and $13.50 by late 2025, and potentially higher, like $20 plus long-term. But these rosier long-term views aren't unanimous. It highlights the uncertainty and the fact that it's really a bet on that future recovery actually happening.
Got it. So fundamentals are challenging. Valuation is, let's say, complex. What about the technicals? What are the charts telling us? The stock's currently near $11.64. Sources mention support near $11.42. That's the 50-day moving average.
Right, just shorter-term trend line.
And then more significant support seems to be around $10.61, the 200-day moving average. So some levels where buying interest might step in.
Yeah, those moving averages often act as psychological floors. Below that, things could get dicier.
What else do the charts show? Momentum? Volatility?
Well, the relative strength index, the RSI, is around 56. That's pretty much middle of the road, neither overbought nor oversold, just neutral. And it's had about 50% green days in the last month. So up days and down days are pretty balanced. It suggests moderate volatility, maybe a sideways or slightly bullish drift, but no strong trend. Plus, overall volatility is low, just 0.8% recently. Price movements have been quite stable.
So putting that together, neutral RSI, balanced up-down days, low volatility. Sounds like the charts aren't screaming action either way, especially for short-term traders.
Exactly. Limited opportunities there based on these technicals. It reinforces that cautious, maybe sideways picture for now.
Okay, so let's talk sentiment and news. What's the general feeling around Walgreens? Sources note a neutral sentiment overall. The Fear and Greed Index is at 39, which leans towards caution or fear in the broader market context.
Indicating investors aren't feeling particularly bullish right now.
And analysts, as we said, mostly rate it hold. No big insider buying recently, no major corporate news sparking excitement. It feels kind of quiet.
It does seem that way.
So what could move the needle for Walgreens going forward? What are the potential catalysts investors should watch?
Good question. In the medium term, definitely keep an eye on earnings reports. They'll be crucial for seeing if that profitability picture starts to improve. Also, any news about restructuring or new strategic moves, especially in healthcare delivery, if they announce something innovative there, that could be a catalyst.
Like leaning more into clinics or digital health?
Potentially,
Oh,
yes.
yeah.
Something that signals a successful adaptation. Then there are the macro factors, changes in healthcare policy, inflation's impact on shoppers, regulatory shifts. Those could all play a role.
But no specific big M&A deals or major product launches on the immediate horizon, according to these sources.
Not mentioned, no. So the focus seems more internal operational performance, strategic shifts, rather than external blockbuster events.
Right. And with any potential investment, we have to talk risks. It's not all potential upside. What are the key dangers here?
Absolutely crucial. Sector risks are significant. Changing healthcare regulations are a constant threat. Reimbursement pressures from insurers are ongoing. And the competition is just intense. Retail pharmacy, healthcare services, it's a tough space.
Okay, those are industry-wide. What about risks specific to Walgreens?
The big one is their recent financial performance. Those losses create uncertainty about when or even if they can achieve a sustained profitability recovery. That's a major overhang.
And broader economic risks.
Yeah, macro risks too. Consumer spending, if people pull back, that hurts retail. Inflation impacts costs. Interest rates affect borrowing. All the usual suspects can impact revenue and margins. While the sources say liquidity and volatility are moderate, that hold consensus from analysts really underlines the caution. They see these risks too.
Okay, so we've covered the fundamentals, valuation, technical, sentiment, catalysts, and risks. Let's try to bring it all together. Based on all this information from the sources, what's the bottom line for you, the listener, considering an investment in Walgreens Boots Alliance? It doesn't sound like a slam dunk buy.
No, definitely not a strong buy, flashing green lights. It's a complex picture, really. The synthesis points to cautious optimism at best, balanced by those significant risks we just discussed. The main drags are the profitability challenges and the mixed analyst views.
But there is that low forward PE.
There is. And the potential for recovery does offer some value, but it seems geared primarily towards long-term investors. People who are patient, willing to accept the risk, and hoping for that gradual turnaround in earnings.
And for those investors, is there an attractive entry point suggested?
Some sources suggest a range like $10.50 to $11 might offer a better margin of safety slightly below current levels.
And for short-term traders?
Opportunities seem limited, low volatility, neutral signals. It's just not set up for quick active trading right now. Someone might try a short-term trade with a stop loss maybe around $10.40, just under that 200-day average, aiming for maybe $12.50. But the risk-reward doesn't look particularly compelling.
So, summing it all up, Walgreens presents a really complex investment case. It seems to favor the patient, long-term investor who believes in a turnaround rather than someone looking for quick gains. It's a great example of why you need to look at all the angles, isn't it? The good, the bad, the uncertain.
Absolutely. And it raises a fascinating question looking forward. How does a legacy company like Walgreens adapt? How does it transform itself in this rapidly changing healthcare landscape? It really reminds us that value isn't always just about today's numbers. Sometimes it's about management's ability to navigate change and execute a strategic shift over time. That potential for transformation is key.
That's a great point. A lot to think about there, indeed. Well, thank you for joining us for this analysis of Walgreens Boots Alliance using the sources you sent in. We hope this has given you a clearer understanding of the company's current position and future prospects. We'll be back soon with another exploration of your source material.